Hi everyone, my name is Yu Zhang and I'm joined by Hansen Chen Xizhang and Xiang Zixiao, and we are Team EA. Today we will present our investment recommendation for AGL Energy Limited. Based on our analysis, we get a buy recommendation with a target price 14.78 and upside of 39.1. AGL stock is known for its diversifying the energy portfolio and energy transaction technologies and has a strong position in the industry. We have analyzed the valuation of AGL through financial models such as DCF and comparable company analysis, and found that the current price of AGL is much lower than expected. In addition, we conduct a risk analysis of AGL to find the best investment strategy. Next one.
AGL Energy Limited is a publicly listed Australian company that operates a range of power generation assets and sells energy to consumers. In 2024, the company generated a total revenue of 13,642 million, including sales and other revenue. In 2024, AGL had 3,894 employees, including employees from all subsidiaries from the company's control. AGL Energy Limited's current ratio and asset turnover is higher than the peer average, suggesting it more effectively generates revenue on its assets. However, AGL Energy Limited's net profit margin and pre-tax margin is lower than the peer average, and it has high competition. Next. The PESTEL analysis analyzes the industry from political, economic, social, technological, legal, and environmental. It underscores the dynamic challenges and opportunities that lie ahead for AGL in its mission towards a cleaner future. Next. The Porter's Five Forces analysis on AGL shows that the bargaining power of suppliers is tempered by the rising demand for sustainable materials, while customers wield significant influence as they seek greener alternatives at competitive prices. Next. This is the share price of AGL, Origin, and the TPC for over the last 3 years. From this, we can see the market has high competitive. Thank you.
Okay, let me introduce this part. AGL Energy is one of Australia's leading electricity and gas suppliers with around 4 million retail accounts worldwide, accounting for around a third of the market. AGL's diversified power generation portfolio and the aggressive strategy investments give it a stable operating capacity and provide it with a stable source of income. Australia's energy policies and variable market conditions, along with the growth of renewable energy and government support, have driven renewable market development. High utilization in the commercial and the construction sectors has boosted energy market growth and demand for new energy, creating a supportive environment for AGL's business expansion. AGL's strength lies in its diversified energy portfolio of coal, natural gas, hydro power, and wind, which help spread risks and stabilize supply. AGL is also advancing the energy transition, aiming to add 12 gigawatts of renewable energy by 2035, aligning with Australia's low-carbon policies and boosting its future competitiveness. AGL's financial data indicates a recovery in profitability and operational efficiency in 2023, with ROA, ROE, and the net profit margin gradually recovering after the turn in 2021 and 2022. At the same time, compared with the operating profit margin of its peers, AGL's performance has been close to the industry level, showing the improvement of market competitiveness. competitiveness. In addition, AGL's debt ratio has continued to decline since its 2017 peak, indicating that its control of financial leverage is more robust, which reduces financial risks. Taken together, the improvement in these indicators and the lower debt level support the decision to continue holding and recommend buying AGL shares, and it remains to be seen whether its profitability and operating efficiency can maintain upward momentum in the coming quarters. Thank you.
Thanks for Chen Yizhao. As we take a look at the football field analysis, our target price is 14.78 and the current price is 10.72. For valuation purposes, we have combined the DCF 52-week range alongside the comparable common analysis. Due to the high profitability borrow AGC AGL conversion, we assigned a value of 57 to PE. In addition, due to AGL's low cash flow turnover, we assigned only 1% of weight to DCF. Finally, since AGL's financial has only recently risen and its profitability and operational profitability in subsequent quarters remains to be seen, we assigned a 52% with 52-week range. Next one, please. Moving on to the results of our DRC model, we have observed that the broadcast has a strong price of 4.57, which is due to AGL's low cash flow turnover, whereas the broadcast has a strong price of 28.25, which is due to AGL's profitability continuing to rise significantly. Next one.
A sensitivity analysis shows how WACC and terminal growth rate affect AGL valuation in the dismal scenario of WACC 8.6% and a growth rate of 4.35% and the optimistic scenario of WACC 6.06% or the terminal growth rate of 5.35%. AGL's share price is 5.19 to 28.25. Market price 10.6 is above the benchmark expectation of 8.10. The future market is good, but downward pressure exists. If the market will improve, purchase it, but it still has some risk. The next page, please. The AGL mainly faces the pricing volatility, government regulation, and network security risk. AGL hedge cash flow via futures and options, plus long-term power purchase agreement boost plant flexibility and optional security. AGL is also investing in wind and solar energy to decrease the impact of the carbon price fluctuation on the electricity pricing. To mitigate the considerable policy and regulation risk, AGL follows the National Electricity Act and the Australian Energy Market Agreements, pricing and renewable energy integration requirements. AGL continue to communicate with the government to ensure policy changes don't damage their business. Finally, the Cyber Act threatens the power plant's business and customers. To protect the client data and infrastructure, AGL should use modern cyber security technologies, the periodic risk assessment, and the employee safety awareness training under the privacy requirements. AGL takes these steps to sustain their business in a challenging market and grow sustainability. Despite next page, please. In summary, despite the risk, AGL market diversified the investment, drive new energy development and more returns. Also, AGL's profitability, operational efficiency, and debt recovery have increased the market competitiveness. Current stock price is 10.62, target price of 40.78, offer 39.1% upside and the profit room. That's very common to purchase it. And this is our reference page. Next is our references. Thank you for listening.